Hello, everybody. Welcome to Intermediate Accounting 17th edition video solution walkthrough for Kiso, Wangan, and Warfield exercise 1422. The textbook authors are Don Kiso, Jerry Wangan, and Terry Warfield. The question used in this presentation is copyright 2019 by John Wiley and Sons, or Wiley. All rights reserved for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or Wiley. Okay, so we're kind of going into, at least for myself, this is more of a little bit of like uncharted territory, which is I have taught, I mean, obviously I've taught the first semester of intermediate accounting for about 6 years, but when we're kind of getting into the parts of over here with liabilities, I started going through this video and I said, oh my God, I got to go back and review it. So if this is giving you trouble, it's not, it gives us all trouble. So in any event, what we're talking about today are debt restructurings. Okay. And so this can oftentimes happen, especially with banks. So banks have obligations, or they're basically reporting to the regulatory agencies their assets. And if they have non-performing assets, meaning that if a loan is going into default, that can be problems because they're limited in terms of how much non-performing assets they can actually have. So we've got over here, and this is going to kind of give it away, term modification without gain, debtor's entries. So we know that we're not going to have a gain, but let's kind of understand why. So we're reducing the principal obligation from 3 million to 2.4 million. We're going to extend the maturity date, reduce the interest rate from 12 to 10%. So Barclays pays interest at the end of each year. On January 1st, Barclays pays the amount in cash to American Bank. So will the gain recorded by Barclays be equal to the loss recorded by American Bank under the debt restructuring? And the answer to that is going to be no. We're going to be computing these separately. And in fact, there is going to be, this will not have a gain just because we're in somewhat of a different type of situation here. So let's go ahead. Can Barclays Company record a gain under the term modification mentioned above? The first thing would be is that if we did in fact have a gain, which is not the case here, but if we did, there's going to be an other gain or loss on debt restructuring, but let's see how we actually go through and compute it. To figure out if we have a gain or a loss, we're going to basically take over here the carrying value of the note, or basic carrying value of the note payable, and this is going to be 3 million. Now, in order for us to have a gain on restructuring, the future cash flows undiscounted need to be less than the carrying value of the note payable. So what are going to be my future cash outflows? Well, I know that I'm going to have to pay 2.4 million in, I want to say that's going to be in, this future cash outflow is going to be on January 1st, 2024, but I'm also going to have interest payments. My interest payment, the first one I'm going to be making is going to be on 12/31/21, 12/31/22, and 12/31/23. When I make these interest payments, it's going to be 10% of the carrying amount of the note. So when I add up So when I go through and I add up all of this over here, right over here, when I add up all these amounts over here, I get a total of 3,120,000. This is greater than the carrying value of the note payable, so we're not going to have a gain in this situation. So that's why we have a gain or loss, even it tells us without gain. We're going to be looking at a question shortly that is going to have a gain. So be excited for that because I'm going to have to go read up on it. So we're going to go through and deal with that in a later question. But for this question for right now, we're all good. Okay, now assuming that the interest rate Barclays should use to compute interest expense in future periods is 1.4276. That's nice that they gave us that number because I couldn't figure it out otherwise. Prepare the interest pay, or we could have figured it out, but it would have been with Excel and a lot more fun. Prepare the interest payment schedule for the note Barclay after the debt restructuring. Okay, so if I kind of look at this now, we're going to have 12/31/21, 12/31/22, and 12/31/23. Let's put the stuff that we know about, right? So we have our cash payment is going to be 240,000, right? Because we know that every single one of these, we're going to be going through and paying 240 grand. Now, the note payable, the carrying value, this is going to stay right over here at $3 million. Now, when we have the interest payment, right, we're given a new interest rate. Whenever we see an interest rate, it is always an annual rate. So my interest rate is 0.014276. Okay, so my interest expense is basically going to be 0.041276 times the carrying value of the note payable, or I'm taking this 0.014276 and I'm multiplying it by $3 million. Okay, so that's where we're getting that number from. Now let's just write this up. So 3 million times 0.04014,276 equals 42,828. Okay, so the difference then in terms of the amortization okay, so the difference between the cash payment and the interest expense is going to be the amortization of this note payable. So my carrying value at the end of the period is going to be 3 million minus 197,712. Now the goal here is that when we pay this thing off on 1/1/24, we want this to get down to 2.4 million. So let's see if it works. So come over here to the next period. I take 0.014276 and I multiply it by 2.8 million. And we'll just borrow from above. Wow, I screwed that one up. Wow, right. I don't really like that 0.014. I don't know what's going on. 40,013. Okay, so my amortization of my note payable is going to be the cash payment minus the interest expense. Or 199,987. So my carrying value of my note payable is going to be right over here of 2,602,841. So we can kind of make ourselves a 3 million minus 197,172 equals 2.8 million. 2.8 million minus 199,987 equals 2.6 million. And then lastly, let's get over to here. So our last one is going to be the interest rate of 0.014276 times 2,602,000. This over here is going to be 2.6 million times 0.014276, or 37,158. So my amortization of my note payable is going to be right over here at 2 million. Well, I screwed that one up. No, it's going to be A minus B equals C. So this is going to be 240 minus 37,158. So my carrying value of my note payable is going to be 2,602,000 minus 202, which is pretty close to $4 million. Why don't we just go in here and sheet this out? Let's go 202,843. Uh-oh, 202,841. Yay. Okay. So right over here, we got 2.6 million minus 202 2,602,841 minus 202,841. So this is getting us to the 2.4 million. Okay. So it's asking us to prepare the interest payment entry for Barclay Company on December 31st. So what I'm going to do over here on December 31st, 2022, well, we have this, we know we're making a cash payment. So I'm paying cash of 240,000. What else is happening here? Well, I have interest expense right over here. And I have a note payable because I'm decreasing that amount by 199.47 to record interest expense. Okay, so what entry should Barclay make on January 1st, 2024? So on January 1st, 2024, what Barclay needs to go through and do is that they need to show the payment of the note payable. So they're going to debit notes payable for 2.4 million. They're going to credit cash for 2.4 million. Okay, so again, so this is kind of what we're going through and doing. We do not recognize a gain because the future cash flows are greater than the carrying value. The other thing is that we had to have the interest rate. Could we have figured this out? The answer is yes. I believe we could have, but it's thankfully for us, it's given to us. So this is what I'm going through and using. And then we just have over here, we do the chart to make sure everything works out. One of the things you're going to notice, especially in chapter 14, as I've gone through and done these videos, I am always going through and doing this amortization chart. Why? Because I want to make sure I got the answer right. And I can tell you that as you're going through and looking at some of these questions, great example would be, where was the one? Where we're making an interest payment, and this is on a prior question, right? Like right over here, like this is why, and this is a great, you want to start using Microsoft Excel. So take Excel classes, you want to use Microsoft Excel because when you get to the CPA exam, and especially in your career, if you're not using Excel, you're going to be behind. In any event, thank you for joining me here today. That was exercise 1422. And I want to again thank Wiley for allowing me to go through and to make these videos. Please don't forget to like and subscribe. And if you would like to see other solutions, please feel free to ask for them in the comments. Have a great day.